All right, weekend's over. Back to work. Back to work. We got some money to make this first week of June. Boy, these markets have been wild lately. That beautiful squeeze on Friday afternoons. How amazing was that? And of course, this gorgeous V bottom we got this afternoon. Now, put those two clues together. Big old short squeeze last Friday afternoon. We loved that one last Friday. And that V bottom off the low this afternoon. Put those two clues together. And this tells us pretty much the easiest way to make money tomorrow morning. I have 4 trades I'm tracking for tomorrow. Short squeeze, V bottom, 4 trades I'm tracking. A lot of traps on my radar for tomorrow. We're going to cover all the details, all my favorite entries, my exits. By the time we're done tonight, you'll have an easy roadmap to make some money tomorrow morning as well. Now, before we jump in and talk my favorite trades for Tuesday, make sure you subscribe to our channel. You don't want to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me. Give me a shout out. Give me a hell yeah down in the comments section below. Thank you so much for tuning in, supporting our channel. Enough of the intro though. Let's go make some money on what should be another great day coming tomorrow. Now, I have charts already in front of me here today. Nasdaq triple Qs are all ready. The Emini and the SPY is ready. I have 3 very important clues on these charts in front of me that are telling us pretty much exactly where the money be made for tomorrow. One of those important clues is right here in front of us on the 60-minute time frame. We are bullish overall right now on the S&P and SPY. We are bullish overall right now on the Nasdaq and the triple Qs. I like to use these 60-minute charts to give us the overall directional bias. But you know what the time frames, these 60-minute time frames don't do? They don't give us the entry tactics for tomorrow. Great for direction, but not that great for timing the best entries. I have 2 more important clues on my tick charts, my faster time frames tonight, and that will tip us off to where the best entry timing will be for tomorrow. And before we jump in and talk about those entry tactics, the 2 more clues, let's look at our schedule for tomorrow, because tomorrow's another busy day. Get a busy week this week. Tomorrow we have a big block of news you'll see coming out at 10 o'clock Eastern time. The big headline news tomorrow is that JOLTS report tomorrow morning. Now, if you watch these videos every evening, you know anytime we have news at 10 o'clock Eastern time, you want to be paying attention. So I would definitely make sure you're at your desk and paying attention tomorrow morning in our trade room around 10 o'clock Eastern time. We, of course, will be there tomorrow as of 8 o'clock Eastern time, get charts all prepped up, and go hunting for trades tomorrow morning, the trade room. But be aware of that tomorrow, 10 o'clock Eastern time, is that JOLTS report. Now, let's get back to our charts though. I mentioned earlier, these 60-minute time frames are great for the overall direction. We're bullish right now into a trading range. Buyers here are trying to roll this thing back up into that range, that beautiful squeeze off the lows we talked about from last week. But again, this just gives us the overall direction, right? It's not going to help us time the entries. Let's go drill down now to some tick charts. This is a 7,000 tick chart you'll see up top there, upper left-hand corner, all the time frames there in the upper left-hand corner. I think tick charts make everything easier, especially entry timing. And also, too, this, by the way, is the 21 EMA. In case you're watching right now, tuning in for the first time right now, there are 2 more important clues I see on these tick charts. One of them is this big short squeeze going higher. Who could have ever seen that coming last Friday, right? Anyways, got that big squeeze last Friday we talked about last week. Now, a big move higher, what does it tell us? We don't want to buy way up high up here. We want to buy that deep pullback and run back up to retest the high. We got that deep pullback. Now we know the buyers want one thing. They want to go back and take out that high and punch their ticket back up to recent all-time highs. The second clue, though, is the most important clue. It's that V bottom. We had that beautiful sharp pullback and really kind of that boing right back up into that range above us. Now, if you watch these videos, you know that anytime we see a V bottom like this, there are 2 places I look for to find winning trades. One is underneath a prior swing. We call these bear traps. I have 3 different variations of bear traps. You know, bear traps, I love trap entries, but they come in lots of shapes and sizes. We'll talk about three variations of some bear traps in there, but also too, oftentimes because the strength of that move is so strong, oftentimes we go all the way back and we get one of my favorite trades is that double bottom reversal. I have two entry tactics, two entry triggers I'm looking for to capitalize on that double bottom. That's a very important clue. So when you think about this chart right now, we really have three scenarios I want to be ready for tomorrow. One is the continuation going higher. That may seem easy, but I'll tell you right now, we have a hard time. We can't chase this thing going higher. So we're going to cover how to make money with this. More importantly, how to avoid traps up there if it runs higher. I have three types of trades I'm watching if we go higher. We'll cover that a bit later on in the video. We'll cover that shallow pullback. That is something on my radar. And we'll cover, of course, that double bottom as well. So let's first begin right now with the pullbacks. And then later on in the video tonight, we'll talk about if we don't get the pullback, how to avoid trouble and make some profit on the way going higher. Most important thing right now is I'd like to get underneath some of these prior swings. One of the most important parts of a V-bottom reversal. Now, you know me, right? I'm not a big fan of picking tops and bottoms. So what I'll do is I'm going to wait for a pullback, get underneath some of these prior swings, and then look for what I call a failure pattern into a pullback combination. Now, we go into a lot more detail of this in the free video class, but the simple aspect of this is I want to trap sellers underneath that 21 EMA. Use their stops to squeeze this thing running higher, and if we're lucky, we'll get that pullback combination that follows up with it. In the free video course, I call these failure into pullback combinations. Now, sometimes what happens is we don't get that pullback. Sometimes the market will kind of squeeze and run higher, and we look to buy as low as we can. And to do that, we're going to use a bear trap pattern. So it may end up becoming more of a failure pattern below the moving average into a bear trap pattern. Again, bear traps will be a higher high in price and a move right below that low. If you guys are in the video course right now, we talk about this quite a bit in a lot more detail. So think about that sequence on that relatively shallow pullback. Now be aware of this. Sometimes there are so many buyers down here, it'll jump right up. If it jumps right up, I don't want to buy high, I want to buy low. So a shallow pullback on this, I'm looking for a bear trap. So some variations of this on this pullback below these prior swings. The bottom line is I want to get pulling back. I want to trap these bears below that moving average, let them sell short. Remember, it's a big move higher. We know the buyers want to go back and take out that high overhead right now. I would love to trap the bears in with a failure pattern and then grab that first pullback or grab that bear trap, that technical bear trap pattern on the way going back up to retest the high. And again, if I don't get that failure signal I want, if all we get is kind of a V bottom off that low, I'm going to look for just that technical bear trap, higher high in price and a trap right below that low. So anywhere underneath these prior swings, I'm looking for that failure into pullback, that bear trap combination off of that low. Now, be aware, that strong move down, again, we may wind up running all the way back down to retest that low. These are oftentimes the most lucrative. These double bottom reversals can be one of the most profitable trades we take each week. Now watch closely. If we wind up going all the way back and taking out that low, which would not surprise anybody right now because of the strength, that V bottom. If we run all the way back to that low, now remember, momentum is going to be very bearish at that point. So in these situations, this is what we look for, what's called a two-try failure. It's a slight variation, another way to look at a bear trap. On this one, we don't get too aggressive and let bears try once. We wait for bears to try twice on this. Why twice? Because again, if they roll all the way back to that low, that's a lot of momentum there in the short term. I want to respect that momentum. Let those bears try twice. Now think about this, right? This is a horrible spot to be a seller. If I can get these bears roped in, now think about where their stops are, right? This is why I love failure patterns and trap patterns in our trade room. But think about where the stops are now and try to use those stops and squeeze back up and take out that high. We're an overall bull market. Great spot for a bear trap down here. And again, I use the terminology bear trap in different ways. This would be a 2-try failure pattern. Then as the market goes higher, this is where the technical bear trap pattern will always come into place. I'll tell you right now, these are some of my favorite trades each week in our trade room. A big move down, a double bottom in an overall bull market, trap the bears in with 2 tries, run those stops, and then again, as we go higher, you want to buy as low as you possibly can. So the key is higher high in price and a bear trap low. And again, you want to hold that runner, leave those targets back to retest the high, because that's exactly where these buyers are going to want to go. Overall bull market back to retest the high. Now, let's slow down for a second, because I know that most of you guys and gals watching right now, you know why we love failure patterns. You know how to make money on trap patterns. You know we love big moves and range rotations. But if you're watching for the first time right now, this might be a brand new language for you. But don't you worry. I teach all these entry patterns. I have hundreds of examples of double bottoms, failures, trap, pullback combination. I teach all this in so much more detail in our free video classes. I'll put a link up top here for you. Don't you worry. Upper right-hand corner, grab that link that popped up there and take that free trading course, because the strategy you're going to learn in that short video series will teach you a stupidly simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. Then more importantly, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns, help kickstart you making money on failures, traps, whole lot more. Everything's covered in that free video course. Guys, the markets are so good right now. If you're not making consistent money every day, if you're still missing the best trades each morning, if you're struggling to qualify for a funded account at Apex or Top Step, hit the link that popped up there. Take that free course. Perfect for someone trying to make the jump into full-time trading. Also be aware too, I'm going to put all the important links tonight, the description of the YouTube video. I'll put the free class links. Start there for sure. I'll put our trade room membership links. We trade together every day, 8 o'clock Eastern time, S&P, Nasdaq in our trade room. And also too, I post a lot of updates on Twitter or X during the day. If you're on X or Twitter, give me a follow. All details listed, description of the YouTube video. Whatever you do though, if you're watching for the first time right now, take that free video course, because that will give you the roadmap you need so you always know where the best entries and exits are going to be each day. So we've talked about the shallow pullback now. We've talked about that deeper double bottom pullback here. One last thing, and again, in a moment, we'll talk about the price going higher here. One last thing. We may have so many buyers down here. We may get this thing to run lower and V bottom once again. Overall bull market. So if I see a V bottom off the low, what you want to think about whenever we see a V bottom, if it runs lower and snaps back up, you want to think about this pattern. Watch that V bottom. The hardest part about these is that once it begins to, remember, because again, I want to buy down here, right? I want to get down, trap those bears in, and squeeze back up again, right? That's the goal with the bear trap right there. But sometimes I don't get it, right? Sometimes it just V bottoms right off of that low, and you're left going, what the heck happened? What you don't want to do is you don't want to chase it. That's the one thing you don't want to do, is chase this thing going higher. What I'll do tomorrow is draw a trend line off the highs, bring it down off that low. And just like I said earlier, whenever we have these V bottoms that begin to grind up like this, I look left, I find some prior swings, and my goal is I want to get around one of those prior swings. I want to buy the first test of that new channel. Makes sense, right? First time we pull back to the low of that channel, and this could be a bear trap, like we're showing you here. A lot of times we get below the moving average. This turns into a failure into pullback combination. As I said earlier, could be a failure into another bear trap combination. Again, if this is all brand new to you, you'll learn all the details, the terminology in that free video course linked up top there in the upper right-hand corner. But just be aware of that. We want the bear trap down here. I want that failure pattern below. but we may not get it, right? We may get that V bottom off that low. If that's the case, grab that first test off the low of that channel. It'll be a trap, a failure, a pullback combination, maybe a strength trade, going higher there as we go. That's how I want to trade the pullback right now. Lots of bear traps, right? On the pullbacks, lots of bear traps, trying to get in before we finish off that rotation and run back up to retest the high. Now let's talk about what probably is the most difficult part of the process if we do end up squeezing running higher, because one thing we talk about a lot in the free video course, if this is a trading range, if that is a trading range, we now know the amount below that range will try to slingshot or pendulum swing, as we call it, back up to the other side of that move, right? There could be a lot of upside there as these buyers make a run back up to recent all-time highs. So let's talk about that, because I can't chase this going higher. You're asking for trouble trying to chase it going higher. So how do we stay out of trouble going higher? And more importantly, how do we get positioned to make some money if we go higher? Let's look at the Nasdaq now. Nasdaq and the S&P are always pretty similar. Nasdaq on the 60-minute chart, we're bullish overall into that trading range, that deep pullback. We talked about the squeeze last Thursday afternoon. And so we know right now the buyers want one thing. The buyers want to go back up into that trading range and ultimately take out that all-time high at 19,023 and a quarter. The 60-minute chart is great for the big picture. It's great for the overall direction. But again, it's not great for timing the entries. This, of course, now is a 4,000 tick chart on the Nasdaq. And as always, the 21 EMA, it's pretty much the only indicator you need to find lots of winning trades each week with us in our morning trade room. Just as we said in the S&P here, we have a big move higher into a trading range. Anytime we see a big move in one direction, we don't want to buy high. We wait for a two-legged pullback and a retest of the high. We know the buyers want to go right now. And just like we saw on the S&P, that V bottom off that low makes it very difficult now to want to buy high. I want to look for that shallow pullback bear trap, that double bottom reversal, that V bottom scenario we talked about earlier on the S&P. So I won't go over the whole entire thing once again, but it's pretty much the exact same game plan we outlined on the S&P a few moments ago. Now let's cover the price though, going higher here. What's my concern? My concern is if we go higher here, I don't want to buy high. So there are two patterns I always look for. On the way going higher, I'm looking for bear traps. Bear traps are always going to be the entry I look for on the way back up to take out that high. Remember, bear traps come in lots of shapes and sizes. The simple way to look at it though is it's a higher high in price, move right below a prior low. It's a strong run up, it's a higher high in price, and a move right below a swing low. There are bear traps everywhere on these charts. Once you know what they look like, you will never stop seeing them. So keep an eye out for that bear trap on the way higher. And again, ideally, I want that trap entry, that bear trap entry, before we go out and take out that high. Now, at that point, if we do run up and start making some big moves going higher, anytime I want to avoid buying high like this, after we retest that high now we look for what's called a two-legged pullback. Now, two-legged pullbacks are really simple. Anytime I see a big move in one direction, I look for basically a measured move. In the free video class, we talk a lot about measured moves. I want to see us get below that 21 EMA. And when I say two-legged pullback, one leg, two leg, right? And then enter from there. So if we make that big run higher, don't chase it going higher. Wait for that two-legged pullback. And when I think two-legged pullback, here are the techniques I'm looking to use here. Get underneath that moving average. That's the most important part. Get under the moving average. And again, think about a measured move. When I think two-legged pullback, I think a bit more than a measured move, a bit more than a measured move, a bit more than a measured move, right? That's what I'm thinking on a two-legged pullback. Now, as always, I do not pick the bottom on this, right? I don't have a crystal ball. I'm never very good at picking tops and picking bottoms. What I'd rather do is wait for the price to pull back, let the bears come in and try a couple times and use one of those failure into pullback, or my favorite is a failure into that bear trap combination. It's the higher high in price and trap right below that low. The good part about this one though is that if we get that strong run going higher, now we know the market wants to go back up and take out that high. That is our objective. Once we get that one leg, two leg, a bit more than a measured move, we don't pick the bottom on this. We trap the bears in. We wait for that one, that two. We don't pick the bottom. We trap the bears in and we squeeze those stops. Trap the bears in, squeeze those stops with a failure pattern. Again, it's that two try failure because the pullback will be pretty deep after a two-legged pullback. Two tries to rope in the rookies. Again, we're overall bull market. Rope in the rookies, squeeze those stops running higher, and then add to your position or jump back in. Or if you miss the failure, get in on the bear trap on the way going back higher. And again, we know the target is now, it's back up takeout, that recent high. So now we're ready. Now we know how to trade a shallow pullback, how to trade a deeper double bottom reversal. We know how to grab some bear traps on the way going higher here, and we know not to chase after it. We know we're going to look for that two-legged pullback a bit more than a measured move. Once we know how big that first leg is, then we know what to look for the entry. We don't pick those bottoms. We wait for the price to pull back to that 21 EMA failure pattern on the way back up, failure into pullback, failure into bear trap for the way back up and retest the high. And don't forget, guys, don't forget, that's the game plan for tomorrow. But don't forget, tomorrow morning, we're going to do all this together at 8 o'clock Eastern time. You know, the easiest way to start making money in these markets, come out and learn this stuff and trade it with us every morning in our trade room. We have up at 8 o'clock Eastern time. Tomorrow morning, we'll trade this all together. I'm going to put all the important links tonight, the free class links, the trade room membership links, my Twitter feed, all stuff you'll need here in the description of the YouTube video. I would definitely recommend starting first on the free video classes, learn the basic strategy, start making money on your own. And don't forget, any questions, any trouble getting access, you can always call the office, use live chat, drop me a comment in the comment section below. I'm always here to help out if you guys have trouble getting access to our free video class. All right, guys? So boy, what a fantastic day today. And of course, a big day coming tomorrow. Hope you learned a bunch here tonight. Hope you use this knowledge to make a bunch tomorrow. And hopefully I'll see you sometime soon and trade with me at 8 o'clock Eastern time as a student of the trade room. In the meantime, be well out there, be nice to each other out there, and be here next time. Adios, amigos. Bye for now.